Home insurance costs surging sharply, up nearly 40% in recent years. We'll tell you more today, coming up on Business Matters. Good afternoon, and thank you so much for joining me here today, this Thursday afternoon. I'm your host, Don Ma. Starting off with markets. U.S. stocks fell today. The S&P 500 tech sector was actually the biggest drag on the benchmark. It was weighed down by Salesforce. Its stock plummeted 20%, and this is after its lowest ever quarterly revenue forecast from late yesterday. We'll have more details on that in just a bit. Some other big movers in markets today. We have Kohl's stock down a whopping 23% after posting a surprise quarterly loss on weak consumer demand. Consumer giant HP jumped 16%. Its earnings beat estimates. And investors are also digesting the data showing that the economy had grown slower than previously thought. We'll have a detailed breakdown of that in just a moment. But first, let's talk about Boeing. The company has presented its new safety plan to the Federal Aviation Administration, or FAA. Though the plan is not public as of now, FAA head Michael Whitaker outlined key points today. Here's the story.
It will continue to be an intensive engagement.
FAA head Michael Whitaker says he likely won't let Boeing ramp up production in the next few months. The FAA is further clamping down on Boeing after a series of plane malfunctions and allegations of a poor safety culture, all of which culminated in a door blowing off a Boeing 737 MAX mid-flight earlier this year.
We've made quite a few changes since that January 5th incident. Most significantly putting a couple dozen inspectors in the facility itself. So moving from more of an audit approach to oversight to audit plus inspection.
Whitaker says the FAA previously audited Boeing's work after it was done. Now, FAA inspectors will watch throughout the plane manufacturing process. Whitaker says Boeing must now have a mandatory safety management system, one that includes stronger protections for whistleblowers.
They have also committed to increasing employee training and communication, strengthening the anonymous reporting system that employees can use without fear of reprisal.
Whitaker says the FAA will continue to constantly work with Boeing, with weekly meetings and people on the floor every day.
So I mentioned Salesforce earlier. Let me just give you a bit more on that. The company lost over $50 billion in market value today after the company forecast its lowest ever quarterly revenue growth, and as well on top of that missed Wall Street estimates on profit outlook. So its latest earnings figures reported after Wednesday's market close raised fears that high interest rates and rival AI offerings were hampering demand at the cloud-based software firm. Salesforce also missed first quarter revenue expectations, marking the first time since 2006 actually that the key metric fell short. Some brokerages warned that Salesforce's forecast also meant software demand had slowed further in April. All right, moving on from that, we got the latest estimate for growth in the United States economy, and it's not as great as some may have hoped because it has been revised down. According to the Commerce Department, gross domestic product grew at an estimated 1.3% from January through March, and GDP is the broadest measure of economic activities. Now, details in the report show that consumer spending growth was revised down, and this was mostly to reflect a larger than earlier report drop in household spending on goods. Now, to help us with further insight on what's behind this downward revision, earlier I talked to Paul Mueller, Senior Research Fellow at the American Institute for Economic Research. Take a look. Paul, thank you so much for your time today, this afternoon. So we got revisions, downward ones, to the GDP from 1.6 to 1.3, actually the lowest since the second quarter in 2022. To start off, what do you think contributed to this downward revision?
Well, the thing that everybody is pointing to is that consumer spending came in much weaker than people had thought, that consumer spending on durable goods, on consumption goods was just the smallest it's been in many, many quarters. And so that's where the bulk of this write-down had come from.
So as I mentioned, the lowest since the second quarter in 2022. I mean, how is the economy doing right now?
Yeah, that's the billion-dollar question. And I think what we see is that the economy is very, very mixed. That certain sectors are doing really well when it comes to, say, AI technology. Those areas are doing well, but other sectors are not doing so well. And so if you look at the stock price of Target, for example, it's fallen pretty dramatically recently on weaker consumer sales. And as people have noted, with the high interest rates and rising credit card debt over the past year and a half, consumers are really being squeezed here. And so the concern that I think a lot of people have is this revision downward, this slowing consumer spending, the beginning of a trend, and something that we're going to see through the rest of the year. And that will be a major drag on the economy that will probably outweigh even bright spots of things that are going well.
So, I have a question here because you're mentioning the consumer. We're seeing that the unemployment rate, the official number, is relatively low. Actually, compared to historical standards, very low. So why is it that we're sort of seeing a mixed picture here when unemployment, some would argue, is a leading indicator of how the economy is doing, is holding up?
Well, one of the key things to know about the unemployment number, that yes, it is good and low from a historical standpoint, but the unemployment number only captures those who are in the labor force, those who are looking for work. What it doesn't capture is people who have dropped out of the labor force. And over the past decade, we've seen quite a few people drop out of the labor force entirely. So that's one issue, that the unemployment rate is not capturing people who have just stopped looking for work. But the other issue is that even though people are employed, the inflation that we've seen has made the value of their wages not as strong as we would hope. And so even though people are earning money, they've seen the prices of their rent, the prices of their mortgages rise. They've seen the prices of gas or automobiles rise. And so the struggle that they have, even though they're working, is that the real wages, the value of their wages relative to the price of everything else in the economy, has really struggled to keep up. There have been quarters of fairly strong wage growth over the last year. But if you look at the bigger picture of the past 4 years, when the inflation really took off, you can see that wages, especially for workers in the lower half of the income distribution, those wages have really not kept up super well with inflation. So even though they're drawing paychecks, even though they're working, that's a good sign. But what we're seeing is that they feel very stretched in what they consume, what they buy, and how far those wages go.
Are you concerned at all for the future of the U.S. economy?
Well, it depends what you mean by that. I think in the short term, there might be a bumpy road, and a lot depends on public policy. I think that we have engaged in massive public spending. There's heavy subsidies in renewable energy and other parts of the economy. So again, my forecast is mixed. I think there's a lot of good trends in the economy, but there's also a lot of concerning things and a lot of wasteful government spending, especially, and distortions in the economy coming through new regulations. And so we'll have to see. I think that there are problems that have to be worked out still, but in the long run, I'm not overly pessimistic.
Okay, just one final thing. Your outlook for Q2 this year.
Well, I think it'll be stronger than Q1. We'll see whether it ends up coming in over 2% or not. But I think it'll be better than Q1, but probably not much better.
All right. Thank you very much for your time today, Paul.
Yeah, thank you.
Okay, besides GDP, there's more evidence that the consumer are being more cautious with the cash and credit. So Best Buy reported another quarterly drop in sales. Americans are pulling back on gadget spending and prioritizing essentials. For example, groceries and rent. So quarterly sales have declined for more than 2 years now at the nation's largest consumer electronics chain. Sales missed Wall Street estimates, but profits beat projections. Best Buy shares rose about 13% today. Still, the company offered a muted forecast for the year. Now, for Best Buy, this was a reversal for what they saw during the height of the pandemic, when its sales were being fueled by oversized consumer spending, as well as government stimulus checks fueling a lot of that as well. And up next, Dollar General shoppers are also feeling the pressure of sticky inflation. The discount store warned that consumers would stay price conscious throughout the year, which it said will hurt demand for its more profitable discretionary items. Its shares reversed course and fell today, but that overshadowed its upbeat first quarter, and that was fueled by customers looking for affordable groceries. Now, in the first quarter, its same-store sales rose. The company also reported gross profit at 30%. The Dollar General is under pressure from intense discount competition from other retailers. For example, that's like Walmart, Target, as well as Temu. And moving on from that, fast food has long been a quick, low-cost convenience for Americans to feed their families. But now that view has been changing as the economy has been changing. Let's now go to NTD's John Marshall for more on that.
A burger's the new Birkin bag. Rising prices and inflation now has many Americans seeing fast food as a luxury item, according to a recent LendingTree survey of 2,000 participants. 78% of consumers view fast food as a luxury because it's become increasingly expensive.
And the price is going up, man. It's like $13 for like some Chipotle now too. Like that. I mean, I remember when it was like, in the $8, $9 range.
Have you found it's been getting more and more expensive?
Yeah, definitely. Especially like where I work and stuff, they really price gouge. So like McDonald's, like it'll be like $20 for like a meal with like a sandwich, fries, and a drink. So yeah, I would say it's definitely increased, like many things.
And have you found yourself cooking at home more?
Yeah, definitely. I try to go for convenience, but lately, like, I try to make sure I give myself time and, like, pack food. I didn't today, I bought food, but I do, yeah, definitely try to just because it saves a lot of money.
Not all fast food chains are rated equally. In the survey, Americans rank Chick-fil-A as the most high-end fast food chain at 25%. Do you believe fast food is a luxury item?
No.
I see that you have some food with you right now. Do you have a go-to favorite fast food?
It's more of a chain, but does Chick-fil-A count?
Yeah, that counts. It's fast food.
I'd go with Chick-fil-A. I feel like that would be luxury, though. Like McDonald's, maybe not, but Chick-fil-A definitely.
After Chick-fil-A, Starbucks, and Chipotle were rated as the most high-end fast food chains, with McDonald's coming in third. Sean Marshall, NTD News.
All right, thanks for that report, Sean. Let's move on now. Let's talk about homes. There's another reason potentially that a home may not be in the numbers for some Americans. So, of course, home prices and mortgage rates are hard to handle. But on top of that, now there's also surging home insurance premiums. So according to the latest data from LendingTree, rates in the U.S. have shot up nearly 40% since 2019. It's now roughly around $2,500 a year. Now, from January to March, home insurance rates have jumped 5.8% across the United States. And researchers are attributing this rise to a number of factors, potentially including natural disasters here, home prices and inflation pushing up materials for home repairs. And prices are also being driven up by insurance companies leaving riskier states like California and Florida, for example. And with me here now is Jason Meister. He's the managing director of Hotelling Risk Advisors. So, insurance, right up your alley here. You have years on the ground, so tell us, why are rates going up so much, nearly 40% in the last 5 years? Tell us what we need to know.
Sure, and thanks for having me. Look, if you look nationally over the country, historically over the last decade, insurance carriers have paid out more in claims than they've taken in premiums. So if you look at 2023, for example, their net losses across the country were about $15 billion. If you compare that to the year prior, 2022, you had $6 billion of net losses. That has to get passed on to the consumer. These insurance companies are looking to be profitable. The other things that are contributing to this, as you pointed out, are natural disasters, inflation, the cost of building equipment, the cost of labor, post-COVID-19. Those are all contributing factors to why those premiums are increasing.
Would you say this is becoming a trend in the sense that we're only going to see prices go up even more?
Yeah, I think you're going to continue to see prices increase. You saw about nationally, you're looking at about an average of 2,500 plus a year. That's a 6% increase year over year. I think you're going to continue to see that going forward.
So let's talk about this. For homes that have been damaged by a natural disaster, for example, as we mentioned earlier, is it becoming more expensive to rebuild those homes for insurance companies?
Yes, the cost of the materials, the labor is all going up post-COVID-19 and post the fact that we have 40-year high inflation. As things get more expensive, the repairs get more expensive. So I think that that is translating to higher premiums.
Would you say that this factor is the main factor, or are there other factors? But is this the main factor?
I think the inflation is the biggest factor, and that's starting to actually plateau. Those costs of building materials are plateauing. So I think that that will come down just a bit. But I think overall, you're never going to see insurance premiums going down. I think they're going to go up. The question is by how much.
Okay, so you mentioned earlier about companies passing on costs to consumers. I'm wondering, other than increasing rates, are there other measures that insurance companies may be thinking of taking to maintain their bottom line?
Well, there's another problem here. There's a lot of insurance fraud in the marketplace. If you go to states like Florida, California, there's a lot of homeowners that are making claims fraudulently, and that's having a huge negative impact on carriers. So that's another thing I would keep my eye on.
So this increase, would you categorize it as a sharp increase or potentially just a natural course of things?
I think I would consider it a sharp increase. I think going forward, we should see it hopefully somewhat plateau, but I would consider this to be a sharp increase in homeowners insurance.
And it will continue to outpace inflation at around 3%?
I think that's correct, but I think that the most important thing that a homeowner can do to mitigate or reduce that increase is to hire a expert homeowners insurance broker like myself to bring those insurance costs down by marketing the home properly. There's many instances where carriers will offer a multi-line discount. If you combine your umbrella, your auto insurance, your jewelry, all those other lines of insurance, many carriers will offer the homeowner a discount.
Okay, speaking of that, maybe you can just give us a brief overview of what you do at your company.
Sure, we're a home office risk management company. We've created a one-stop shop insurance solution. So we really work in 4 main verticals. We have the private client homes, cars, yachts, planes. We do P&C, property and casualty, commercial real estate, all asset classes. We also do high-end life insurance and tax mitigation, and we do employee benefits. So we'll go into a company, we'll do their health insurance, their group life insurance, their 401k, et cetera.
Okay, just one last question here. So according to LendingTree, this year through March, 5.8% in terms of how fast it has increased. Are we likely to see that slow down a bit? Where do you see that stabilizing at?
Yeah, no, I think that you'll see that continue throughout the year. I think this is pretty normal, although I do think that going forward, those building costs, the inflationary issues, I think that those are going to start to plateau, which will help in reducing the homeowners insurance premiums.
All right. Thank you very much today
Thanks
for your
having
insight. All right, moving on. We're going to break now. Coming up after, the largest ever cybercrime network of its kind has been shut down and the Chinese national involved arrested. As well, we're going to tell you, do you want to turn off Meta AI? Well, you can't completely, but there are some workarounds. We'll tell you what they are after this short break. Don't go away. Welcome back. We have some breaking news for you right now in the Trump New York trial. The jury has reached a verdict and it's going to be read soon in court, but we don't know exactly what the verdict is just yet. You'll have to stay tuned for Capitol Report at 5 o'clock. Our Iris Tao is on site. Okay, some quick headlines for you. Amazon customers in the U.S. can now order from Grubhub directly from its app and website. This extends a deal that already offered Prime members a no-fee access to Grubhub Plus membership. As well, Tyson Foods is rejecting accusations that it discriminates against U.S. citizens by disproportionately hiring immigrants. But in a statement, the company said it is strongly opposed to illegal immigration and does not allow employment of anyone under 18. 2 senators are pressuring the White House to crack down on how drug cartels use cryptocurrency to traffic fentanyl. Senators Elizabeth Warren and Bill Cassidy want to know what the administration has done regarding crypto's role in the fentanyl trade. Now, crypto transactions for fentanyl ingredients surged 450% in the year through April 2023. All right, we're moving on to some China-related stories today. Likely the largest ever cybercrime network of its kind has been shut down. A Chinese national has been arrested in an international operation, according to the U.S. Department of Justice. The DOJ says Wang Yunhe has been charged with creating and using malware for cyber attacks, as well as large-scale fraud and child exploitation. So now, according to the DOJ, from 2018 to 2022, Wang received $99 million from sales from hijacked, proxied IP addresses. So the department says cyber criminals would buy access to the infected IP addresses to bypass financial fraud detection systems. And they were then able to steal billions from financial institutions. On top of that, credit card issuers and as well as federal lending programs. And staying on China, starting July 1st, the country will be restricting exports of some aviation and aerospace-related equipment. The announcement came from China's Commerce Ministry, and export controls will apply to engines and structural parts. On top of that, engine manufacturing-related equipment and software and technology. It's also going to include tools, molds, fixtures, and other processing equipment used to make certain materials. So now, the notice said that the move is to safeguard China's national security and interests and meet international obligations. Now, exports of items under the new rules will now require export licenses. Okay, moving on from China. If you use Facebook, WhatsApp, or Instagram, you might have noticed a new character pop up answering questions and offering tidbits of information in your feed, but with varying degrees of accuracy, I might add. This is Meta AI, and as with any new technology, there are of course hiccups, including bizarre exchanges. When the chatbots first started engaging with real people, Meta AI hasn't really been universally welcomed. So if you don't want to use it, here are some tips that you can use to try to avoid that. So for one, on the Facebook mobile app, there's a function to mute it, or there's another way to avoid it is using Facebook's AI assistant. To not use it, rather, is to use the social network's stripped down mobile site at mbasic.facebook.com. So those are a couple of tips for you. And after testing it out in just 12 states, the IRS, Internal Revenue Service, says it's expanding its free online tax filing program in 2025. And that means direct file will be available to taxpayers with certain simple federal returns in all 50 states and Washington, D.C. So Treasury Secretary Janet Yellen on Thursday said that the pilot program for the 2024 tax filing season was a success. And for next year's expansion of direct file, $75 million has been budgeted, but that could change depending on how many people use it. The IRS plans to gradually increase the number of taxpayers eligible to use direct file over the coming years. All right, that's all the stories we have for you today. Thank you very much for watching. And don't forget, as I always say, business matters. Goodbye and see you tomorrow.